Okay, let's go ahead and reconcile September. First, we will start with our credit card. All right. Make sure that it is selected for reconciliation. Again, we will not book anything here. We will stick to our general journal entries, and during those we will book as much as possible in just one single transaction. Right? Isn't that cool? But anyway, let's continue. Oops, ending balance. We still have to enter that and ending date. All right, so what do we have? We have our payment. There it is. Let's see, do we have our transactions? Yes, here they are. Okay, and we're just off, right, by our interest charge. And that one is easy. We can enter it. We know it very well. Let's just make sure we solidify our knowledge. Okay, so that's our interest. All right. All right, end of the month, makes sense. Okay, what's happening here? Make sure we understand, right? Even though we have all the debits and credits right here. Well, the charge will be added to the balance on our credit card, and therefore our liability will increase, right? And liabilities are increased when they're credited. So here it is. All right, what else is happening? Well, our expense on interest and finance charges is going up as well, and expenses go up in debit. And we can copy and paste it right here, right? And that will, again, debits and credits on balance will book this entry. So, and we can close it. Here it is. Right, we're at zero, right? Therefore, we've done a good job reconciling our credit card. Let's finish it. Done. All right, make sure we go to the summary in case of the credit card doesn't ask us to display the report, but nevertheless, we do want it. Here it is. Okay. Ending balance matches, right? Payment right here. Transactions right here. And again, remember, we booked it in those large, huge, right, transactions that have so many debits and credits. The bottom line, what's important is that it still reconciles, right? See, and because we hit the account individually in separate line items, even though it was one transaction, one huge transaction, it had separate line items. See, they all show up right here. Okay, so again, we would print it, attach it to the credit card statement, and we're done reconciling the credit card statement for September. Now let's go ahead and reconcile our bank statement. Okay, even though we're booking all the transactions through general journal entries, right, we still got to enter the ending balance, right? Otherwise, it will tell us, ooh, red flag, we still need that. That's our baseline. Without it, and again, you know, many times I have conversations with people, how do you reconcile, you know, if I have multiple credit cards, for example, in my account? Well, you always see where do you have the balance, right? Whatever at the end of the day becomes the balance, that's the aggregate of what you reconcile. So let's get going. In this case, we're reconciling the statement. This is our ending balance. We will have to include all the transactions, right, that make up this balance. So here it is, ending date, start reconciliation. We're not going to enter anything right here. We're going to enter it using general journal. All right, so what do we have? Well, we know we have our checks, right? And see, they show up. They show up in the memo, right? The numbers. Even though, again, remember, we booked them in that huge, large transaction. And our payment is right here. All right, so we're still off, right? Because we got to book all of this. We got to book these, right? So can we book it in one transaction? Yes, absolutely. That's the cool part about it. It's the cool part about general journal entries. They allow you to do that. So let's do this. Bank, September 2020, end of the month. Let's book all of them. And again, we're going to use the shortcuts that we know. right, to save a little bit of time and space. So here we are. We know that all of these deposits, they're sales, right? And we also know that all of these deposits are conveniently summed up here at the top of the statement. So let's go ahead and book that. We can save a little bit of time on that. So bank account goes up when it is receiving deposits, right? And bank account is an asset, therefore it has to be debited. So again, let's just take the mathematics from here, right? Take the guesswork out. So that's our sales for September 2020. Oops, I jumped the gun. It's 2020. We're still booking 2020. All right, so sales account 41,100, right? Sales slash revenue goes up and credited. It makes sense. This amount is offset by this amount, right? And that's our sales for September. Let's continue, right? So we just entered this. We haven't booked anything yet, but we just entered this, and again, they're conveniently summed up here. And the reason we can enter them all together as a lump sum because they all are coming from sales, right? The source of this money is sales. If it was, for example, investment, then we would break this amount up and we would credit sales and other accounts. But in this case, we know it's all from sales, therefore sales are credited, bank account is debited. Well, let's keep going. Now we have our draw right here. Right. So again, what's happening when we take money out? It reduces our bank account, right? So we have 3,500, 3,500. That's 7,000, right? And another 500. That's 7,500. So we can easily enter that, right? And we took the money out. When we take money out of the bank account is reduced. Bank account is an asset, right? And therefore we reduce assets when we credit them. What else has happened? Well, we have to hit our equity, member draw in this case, right? Member draw is an equity account, even though I know it's counterintuitive. As I mentioned, it's kind of like accumulated depreciation. Still, it's an equity account, and equity is reduced when it is debited. And it makes sense, right? We take money out of our business, we reduce ownership in the business, right? So in this case, we took out 7,500, and therefore we reduced our ownership by 7,500. All right, what else do we have? Well, we have these monthly fees, right here. Okay, well, let's go ahead and book those. So we have our service fee, our bank service fee, and we know it's an expense, and expenses go up and debited. All right. And we have our merchant fee, right here. That's the amount of money the bank charges us for processing payments from our customers that used credit cards, right? All right, so merchant. All right, and now we just need the offsetting. See, they're not in balance just yet. And again, the sum of these two is the offset, right? That's the amount by which our bank account will be reduced. And see, QuickBooks does it for us, and it brings it to balance. And the sum of these two, right? If you add $25 to this, it makes sense, right? This becomes 60, this becomes 9, 269 and 12 makes sense. These two combined will reduce our bank account balance by $269.12, and to reduce the bank account, which is an asset, we have to credit. So again, you see, we booked quite a few items on here. Right? We booked their deposits, we booked the draw, we booked the charges from the bank for service and for merchant account service. And again, what's important is that at the end of the day, debits and credits are in balance, and we will reconcile and we will get zero. So let's get going. Back to our reconciliation window. So here it is, right? We know that all of these deposits right here, they sum up to 10,650. So here it is. We can check this off. All right. What else do we have? Well, we know that all of these draws add up to 7,500, and the fees combined add up to $269.12. Here we are. We're at zero, right? That's what we wanted. That's the objective of every reconciliation. We're going to finish it up. All right, view our reconciliation report. Again, what do we see here? Well, our ending balance matches, right? That's important. We also see that, again, because we kept you know, invoices, in this case, we paid them with checks separately. We wanted to have those separately. They showed up separately. The fees got summed, so we sacrificed that detail. The draws got summed up. We sacrificed that. And the bank payment to the credit card, like, you know, separate. Makes sense. Deposits, same thing, you know. We booked them as a lump sum. We sacrificed the detail, but they're still here. And again, what's important, it reconciles, right? Our ending balance matches. Again, we would print it, attach it to the bank statement, and we're done reconciling September.